Hi, I'm George Salamis, President and CEO of Integra Resources. I'm here with Clifford Lafleur, our latest and greatest acquisition as Chief Operating Officer. Integra Resources is a Great Basin-focused new entrant into the gold production space, gold producer, gold developer, 10 million ounces in the Great Basin.
George, good to see you, and Cliff, lovely to meet you as well. So how's it going, the conference? What's the meetings going on?
Yeah, tons back to back,
Yeah, and the quality of the money that's here, and also generalist money that's here, and even those tether guys are here.
Yeah, amazing. Yes, yeah. What a difference from even 2-3 years back. Yeah.
But well, we were sort of joking about that before we started filming, in terms of not just in terms of valuations, but in terms of the optionality that kind of brings to companies like yourself, and you've taken advantage of it. But I got to talk to this guy.
Talk away.
Clark Kent, wasn't it? Oh no, Cliff, got it, okay. Give us a bit of your background, where are you from?
I've been with Integra for about 6 months. Before that, was with Silvercrest, helping get the Las Chispas operation up and going, and pretty successful deal there. Before that, with Torex, so a few years there helping them get their underground going and their Media Luna project started.
Fantastic, and what have you been brought on to do?
Here as a COO, so my number one priority is to work with the site team at Florida Canyon, our producing asset.
Right.
Looking at ways to expand the life of mine there, and then looking at ways that we can increase the efficiencies and help to hopefully increase and maintain our margin over time here.
Well, obviously the gold price is saying a lot for most of the companies in here. You're looking at the other side of that equation, make sure those margins, the cost stays low, and those margins increase. So, and George, why don't you kind of remind us of maybe the last quarterly numbers to kind of put this in context for people new to this story, and then we'll kind of get into what you're actually doing on the ground.
Sure, of course. And so we've been in production now for just over 2 quarters.
Yep.
And we put out our guidance earlier this year, which was 70 to 75,000 ounces a year.
Yeah.
Total costs to produce an ounce of gold, about $1,800 to $1,900.
Yeah.
All-in sustaining costs high, $2,450 to $2,550, because there's a reason for that, and we're reinvesting a lot of money back into the operation. It's an asset that's been unloved for 10 years, right? So there's a lot of money to reinvest. There's a lot of catching up to do, pre-stripping, pad building. New equipment to buy, but thankfully we've got the margins to provide us with the cash to do that.
About $55 million worth of reinvesting.
Reinvestment. We have a Treasury of 63. We're producing. We're making cash flow. Yes.
Okay. So you said to me last time out, your job is to quarter over quarter deliver against guidance, give people the confidence that this mine will be there.
Yes.
It will deliver.
Yes.
And you guys can actually, produce. And obviously, this guy coming on board, joining quite there's a few new faces in the team. Is it all kind of coming together? You're getting the people that you want?
Oh yeah, indeed. I mean, so along with Cliff, there was a few other transplants from Silvercrest that came. In fact, you could say our company is becoming very sort of Silvercrest-like, I guess, and then that's just a testament to the great work that they did over there.
Yeah.
And so we have talent. Sean Deisner, who came over from on the finance side, so he brings the sort of financial aspect to cash flow management, which is something that we are missing with respect to mine sites.
Yeah.
And then from a permitting perspective, we brought Dale Kerner over to manage the all-important permitting at Delamar.
Absolutely. Yeah. Absolutely. And that's supposed to have been the long pole in the tent, but it's coming, and now with this kind of phased approach to production and revenue, it's a kind of driver for you guys. That will come. But looking to this new team that you've got on board, what was wrong with it before? Is it just a case of it's unloved? Like, can you help us massage and get it to where it was, or do you think these teams can sort of step you up again in terms of that kind of quality and of execution?
Yeah, I mean, typically it was an asset that performed very well at higher gold prices, not so at lower gold prices, right? So there was, because of that, any former owner who had it was constantly running up against a wall, or they had another asset that they needed to fund, so the funds were sucked out of Florida Canyon, sent elsewhere. That happened 2 or 3 times in the ownership history, all at much lower gold prices. And so, we're not in that situation now. We're fully funded to do everything that we need to do. The margins are great. We got into this acquisition, Matt, with the view that we would if it generated $20 to $30 million a year of free cash flow, that was good enough.
Yeah.
Now it's doing much more than that,
absolutely.
and it's paying the bills across the board, and,
Right.
and that's music to our shareholders' ears.
Well, let's look at the kind of engineering challenges versus the expansion challenges. Let's put drilling and a second expansion from that
Sure.
perspective. So when you kind of come in and look at Florida Canyon, was it obvious initially, what you need to kind of focus on in terms of, because he set some targets, you got to hit those targets, but then you kind of got to go, beyond that as well. So what are you looking at with your team?
Well, first you got to look at the people, process, and tools, and those kind of buckets. And I think on the people side, I think we're sorted out.
Right.
I think we've got a pretty good team at the site. And when you start looking at the processes, there's probably some efficiencies there to work out, and making decisions happen faster.
Right.
Probably that would be helpful. On the tool side, you can't move muck, blast rock without equipment. So we're looking to augment the fleet with new equipment and make sure that we have our availabilities and utilizations up, so we can achieve the targets that we want to.
Yeah.
And then there's other technical things that we're looking at, like pit laybacks.
Umbrellas?
Maybe umbrellas.
Somebody call for
We're going to tough this out.
I think that's an omen.
We're going to tough this out. Come on. Okay. Okay, so obviously you've also got the money to do. Having come from somewhere like Silvercrest, you have the money to do what you want, and you've got the money to do it here. That's got to be a great help, and meet your expectations as well, right?
Absolutely. So you can't do these things without money, but it's about being really intelligent with where you spend your money, and how you help the team, and I think those are the processes we're going through now. We're doing the study work to see where we can best allocate our funds to have the biggest impact over the longest period of time.
So fine margins, but you're on it. Good.
Yes.
Drilling. Are we going to expand this?
We are. We're firmly of the belief that we can add mine life to Florida Canyon. It came with a 6-year mine life. We think that we could add many years beyond that. I mean, there's just a few basic things, like the last reserve estimate was done at 1750. We're obviously not 1750 gold anymore. So if you look at higher gold prices, you're going to naturally increase reserves. In addition to that, there's a lot of, I hate to use the word low-hanging fruit because it's overused in the context of this conference, but there's stockpiled material which didn't work at gold prices when they were 1600, work very well now. And so we're defining that material that's already been blasted and mined, right? We need to define it, what the grade is, what the volume is, and then get it into a mine plan. And so you'll see that in next year's feasibility study.
Right, and what I found interesting at this conference are there's the naysayers and there's the optimists, right? How long can this gold price go on for?
Yes.
Will it be a sort of straight line up? I think the answer is no, but can it keep moving through the phase for another couple of years? And how does that affect your thinking? Because right now, as you say, there's stockpiles which perhaps are economic, but it'll take a while to kind of bring that into the system, right? So how do you kind of hedge, and how do you manage that thinking?
Well, hedging. We're covered on the downside, right? So we have puts down to 2750. So, basically that kind of locks in a margin for us, which guarantees the cash flows to go back into the operation to make it self-sustaining and grow. So we're covered for that. We'll probably do more of the same next year because we've got another, I'm going to say 6 to 9 months of reinvestment back into the mine. And then after that, we're through the really big expenditures, right? The big stripping campaigns, the big pad building efforts, and a lot of the equipment will have been working on site by that point.
Right.
So,
and then it's guys are like reaping the rewards of
Correct.
all of this setup that you've done
Right.
At Florida Canyon.
Yep.
Then you mentioned earlier Delamar, obviously permitting.
Yes.
How else are you spending your time and money up there?
Yeah, so I think right now, now that Perpetua is now permitted, it has its record of decision, and of course there's Orla's Dark Star Railroad project that's also in the permitting queue. But we would be sort of one of the more, I'd say, second most advanced projects that's in line to get permitted by the federal regulators and state regulators in our case. Our estimation internally is sort of count 2 years from January, which is when the NEPA process kicks off for us in what is the most permissive federal administration
Yeah.
in decades that supporting permitting.
Definitely, but also Idaho getting a lot of love at the moment as
Yes,
well.
indeed.
Right?
Yeah, yeah.
This is, and I know you kind of called it, but
Oh yes, we're genius.
genius.
No.
And are you having a sort of look around there, a little sort of sniff around, seeing what's coming down the line?
At Delamar, absolutely.
yeah.
So my second priority is to get the Delamar feasibility study
Right.
completed, out by the end of the year. So there's some changes to the Delamar project since the PFS. We've taken out the plant, so no sulfides, all oxides, heap leach.
Okay.
So simplified that aspect of the project for permitting, capital outlay, and getting it into operation sooner. So some big. It's going to be some big changes to the project.
Right, and we can't have a conversation this week without talking about M&A potential. That's all anyone's talked about. All sorts of money coming in, all sorts of money available. Some generalists coming in with some pretty big ideas, telling you how to mine, and this must be a relief to you. But are you seeing deals out there? Because no one wants to overpay, and I get the line that it's all relative, but if it kind of comes off, then it's not relative anymore. It becomes expensive. So do you think there are kind of cash-stranded assets out there which are worth looking at?
So, I mean, what we've seen in terms of bigger M&A activity have been assets that have shaken loose that are non-core to the major producers like Newmont, or next rank down, which would be Equinox and their sale of Penn. And so what was tough for us, quite frankly, to get our heads wrapped around is having paid such a modest price for Florida Canyon for a large reserve base and a pretty decent mine life. Now we have to look at things that are 3, 5, 10 times more expensive. And getting our heads wrapped around, God, has the gold price really risen that quickly to justify that? So, we can get there. We would ultimately like to acquire another leg of production somewhere else before we stick a shovel in the ground at Delamar.
Right.
But there's not a lot out there.
There's not a lot, and I agree with that. I was observing a billionaire walking down the corridor, and my colleague said to me, well, there's a guy who spent $350 million over the last 2 months in the sector.
Right.
He wasn't, not necessarily contrarian in attitude, but he's definitely seeing deals out there that he thinks he can make money on. So, but they're hard come and hard fought for,
Yes,
aren't they?
Yeah, I think, for us, looking at the landscape of what's in production in our sweet spot, which is North America, or specifically the Great Basin, I think if there are opportunities for us to look at, they would have to be shaken free by some other person's
Tech.
M&A, right? Yeah, right. So
Exactly.
all of a sudden,
that's a standard issue, right?
Yeah,
they
that's
like
great.
to shake up when the mergers happen. There's some which are sort of non-core,
right?
We don't quite meet the profile going forward, and there's a certain amount of money they want to hone in on. There's some pretty big transactions for sure, and hopefully you find something. So, look, guys, I better let you get out of the rain. So I appreciate you.
Thank you.
You toughing
Thanks
it out
for
with
doing
us
it
here.
here.
And really good to meet you, Cliff. And I look forward to speaking to you again. Maybe get a little bit technical, and you can share with us maybe some of the upside coming down the line for us.
Absolutely.
Thanks.
All
Cheers.
right.